FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
So if you've been listening to this show or you know anything about money or gold, then no doubt you are familiar with James G. Rickards. He's a lawyer, economist, and investment banker. He's got 35 years of experience working in capital markets on Wall Street. And you know he's a writer and is a regular commentator on finance. And he's been advising clients of an impending financial collapse, of a decline in the dollar, and a sharp rise in the price of gold for years. And he's been right. And in 2011, he wrote the book, New York Times bestseller, Currency Wars, and now he's back with another bestseller, The Death of Money, The Coming Collapse of the International Monetary System. We're really fortunate to have him back on the Financial Survival Network. Jim, welcome back, and thank you so much for taking time to come and talk with us, and thanks for writing an incredible book. I'm reading the book now, and it's fascinating because unlike most of the people who talk and write about the collapse, you really write a very vivid, very detailed picture of what's coming down the pike. But first, just tell us, what was your purpose in writing the book?
The purpose, Kerry, is really just to kind of warn everyday Americans. You know, when I actually met with my publisher before Currency Wars, but the same was true on my new book, The Death of Money, I said, I have no interest in writing for the academic audience. The academics write to each other. They sell 20 books to 20 other PhDs, and that's really all they care about. I wanted to write something that was that every reader could pick up. You know, people in their 50s and 60s are worried about, you know, their pensions, their retirement income, their 401ks. People in their 20s, early 30s, they may not have as much money saved, but they're worried about getting jobs. So everyone's affected by this. I like to say when it comes to your own money, everybody has a PhD. But having said that, the content is very high level. It's not dumbed down at all. It is given in plain English. I use metaphors and plain language. I don't use a lot of fancy jargon, but the content is very high level economic content. So I'm trying to get that out to people. And the problem is people trust the government too much. They think the Fed knows what they're doing, the Federal Reserve. I guarantee the audience that the Federal Reserve does not know what they're doing, and you don't have to take it from me. I've met with central bankers. I've met with members of the Federal Open Market Committee, members of the Monetary Policy Committee of the Bank of England. Privately, they will tell you that they are making it up as they go along, but you don't even have to have that source of information. Just look at policy. They've had 15 separate policies in the last 5 years. First they said we won't raise rates before 2013, then it was 2014, then it was 2015. They had QE1, QE2, QE3, Operation Twist, Forward Guidance, Currency Wars, Nominal GDP Targeting. They put on a 6.5% unemployment goal, then they threw it away. Well, when you do that much improvisation, it tells you that they don't know what they're doing. This is one big experiment, and we're the guinea pig. So people should not rely on the government. They should not trust the Federal Reserve. They should try to preserve their own wealth the best they can. So I'm trying to both give a warning with analysis to explain how it's happening, and then give people some advice as to what they can do.
And if you haven't read Currency Wars, and you haven't read The Death of Money, just briefly tell us what is the exact crisis that we're facing today?
Well, the problem is that the financial system and the capital markets are what's called a complex system. That's a branch of science called complexity theory. But the way the regulators and the central bank governors and the PhDs and the finance ministers, the way they're all approaching it, they assume it's what's called an equilibrium system. And an equilibrium system is kind of like a clock. You wind it up, it ticks perfectly, and then it winds down, you wind it up again. Well, here's the problem. If you think it's an equilibrium system, you think that there's some very simple things you can do to push the system back to equilibrium and get it going again. But if you understand that it's actually a complex systems behave in completely different ways. They're capable of instantaneous catastrophic collapse. By the way, there are many examples of complex systems, an avalanche, an earthquake, solar flares, internet backbone outages, power grid outages. There are lots and lots of complex systems. So it's as if I'm holding a pen in my hand between two fingers, and I say, Kerry, I'm going to let go of the pen, and I want you to predict what's going to happen next. Well, your model and my model says, okay, it's got weight. We're on the planet Earth. There's gravity applies. That pen's going to fall and hit the floor. But the Fed has a model that says it's going to float up to the ceiling. Well, that might be true in outer space, but it's not true here on Earth. My point being, if you have the wrong model, you're going to get the wrong forecast and the wrong result every single time. And so the big thesis is that the central bankers, the eggheads, the professors, and the policymakers have the wrong models. Therefore, they're pursuing the wrong policies. Therefore, we should expect catastrophic outcomes.
Yeah, basically, if you're treating somebody for a headache and they have cancer and you're giving them Advil, they're going to die.
Well, that's a good example, and it's a good, very, clearly stated metaphor, and I think people understand that. What I tried to do in the book, though, is go beyond metaphor and actually give people metrics and dynamics that directly apply. They're not just metaphorical, although the metaphor is a good one. They're actually scientific, and the reader can come along and understand it. So the big problem is the world's in a depression. We've been in a depression, global depression, since 2007. A lot of people don't know what a depression is. They think that it means the continuous declining GDP, gross domestic product, but that's not the definition of a depression. You can have growth in a depression, but a depression is when your growth is below trend. Meaning, if your economy is capable of growing, say 3.5% in the long run, and maybe 5 or 6% in the short run, but you're actually growing about 1 or 2%. That gap between the 2% actual and the 3.5% potential, that's the depression. You have growth, but it's depressed growth. And that gap, that wedge, represents lost wealth, and you never get it back. The best you can do is kind of get your growth back to trend, if you're lucky. But you never make up the lost wealth. But we're not even doing that. We are not getting back to trend. We're stuck in this rut of a 1.5, kind of 2% growth. So you can have growth in a depression, but the depression comes from the fact that it's not trend growth. It's not enough to create the jobs you need and create the wealth you need, et cetera. Well, the problem with depressions is they're not amenable to monetary policy. A depression is a structural problem. To solve a structural problem, you need structural solutions. Monetary solutions are not structural. They're cyclical. They have to do with the business cycle and the credit cycle and so forth. So your metaphor, we're trying to use aspirin to treat a cancer patient, is exactly right. We're trying to use monetary policy to treat a structural problem. It doesn't work. You need structural solutions, and those come from the Congress and the White House. We're not getting them, so we're going to continue with this growth as far as the eye can see. But meanwhile, the Fed thinks that printing money is the solution. It's not, but they think it is, and so they're going to keep printing money and drive this bus over a cliff, and that's why I warn investors they're eventually going to destroy the dollar. They haven't done it yet. They're moving in that direction. They're going to keep moving in that direction because they've got the wrong formula. But now it's time for investors to get off the bus. Don't be on that bus when it goes off the cliff. Get off the bus. Let the Fed do what they're going to do, but protect yourself.
Right, and all central banks are doing the same thing, correct? China has printed even more money. The Bank of China has printed more money than the rest of the world combined. And you've got this huge malinvestment taking place across the world, but wealth isn't being built up anywhere, is it?
Well, no, because we're in a global depression. I would say that most of the central banks are pursuing the wrong policy. So certainly the United States, Japan, Bank of England, People's Bank of China, as you mentioned, and others are pursuing these wrong policies. If there's one central bank in the world that's doing it right, I would say Europe and the European Central Bank and Mario Draghi are doing the right thing. They understand that you don't grow an economy, you're printing money. They have printed some, not to create inflation and give the economy a boost, but to defend the euro, because the euro was under attack in 2011, 2012. But Mario Draghi is the one central banker who's come close to doing things right. I'm very bullish on Europe and the euro for a lot of reasons, including the fact that they have 10,000 tons of gold, actually more than the United States. But you're right about all the other major central banks, U.S., Japan, China, U.K., they're all pursuing these money printing policies. They're all going to fail. It's not that they're stupid. I mean, I've met a lot of these people. I've met central bankers and monetary economists and PhDs and others who are running the system. They're brilliant. I mean, they're twice as smart as I am. They have like 170 IQs. But it doesn't matter. If you have the wrong model, you're going to get the wrong result.
Yeah, it's a garbage in, garbage out. So you're a little guy, and you see that basically they're going to blow up the currencies in the world, and this is going to lead to chaos, isn't it?
Yes, it is, and so the thing is, what can you do about it? Is there stuff you can do now to get ready for it? And the answer is yes. And by the way, the smart money is already doing this. The reason I've written my books, first book, Currency Wars, the new book, We Got the Money. The reason I've written them, the reason I do interviews like this, Kerry, and try to get the message out is that the big guys don't need any protection. They don't need any help from me. The hedge funds, the banks, the elites, they know how to take care of themselves. It's the everyday Americans who are trusting the government, don't see this tidal wave coming. They're the ones that I'm trying to reach out to and say, you know what, there are things you can do. But look at Warren Buffett, for example. Warren Buffett has this kind of avuncular, friendly, down-home image. He's the big stock investor, so everybody should invest in stocks. But Warren Buffett's last two big transactions, a couple of years ago, he bought the Burlington Northern Santa Fe Railroad. He bought the whole railroad, took it private, took it off the New York Stock Exchange. Now, what is a railroad? A railroad is nothing but hard assets. It's right-of-way, mining rights adjacent to the right-of-way, track, rail, yards, rolling stock, equipment, switches, signals, buildings. It's all hard assets. How does a railroad make money? It moves hard assets, coal, wheat, corn, steel, etc., in the form of freight. Warren Buffett's most recent deal, he bought oil and natural gas resources, and by the way, he's going to move the oil on his own railroad, because you put 100 tanker cars in a row, that's a pipeline on wheels. He doesn't care about the Keystone Pipeline. He's got his own pipeline in the form of tanker cars on the railroad. So Warren Buffett is a guy who's dumping dollars as fast as he can, getting into hard assets like railroads and oil and natural gas, and he's ready. The dollar could go to zero, and his railroad will still be valuable. His oil will still be valuable because they're tangible. And so maybe all of us can't go out and buy, an oil field or a railroad, but we can buy some gold or some land or something tangible that will preserve our wealth.
Yeah, exactly. So we should be looking at hard assets. What about real estate for the average person? Does that make any sense?
What I recommend, Kerry, I recommend land, undeveloped land with development potential in good locations and low carry. When I say low carry, I mean try to get low taxes so you're not paying a lot of money to own it. And here's why. It's not clear if we're going to get inflation or deflation. Now, both forces are pulling in opposite directions. We might get both. We might have a deflationary episode that the government cures with inflation, or we might have a runaway inflationary episode that leads to a collapse. And so we could have either one. But land is one of those assets that performs well in both states of the world. If you have inflation, the price is going to go up. The value is going to go up. That's very intuitive to people. People kind of understand that. In deflation, the value of your land might go down, but your construction costs go down even more. So, the copper, the glass, the steel, the architect's fees, the labor, all the stuff you need to develop a property goes down faster. And so you buy the land. If we have deflation, okay, the nominal value of the land may go down, but your development costs will really go down. And then you can develop it at the low and sell it at the high. And a good example of that is the Empire State Building in New York City was built in the absolute depths of the Great Depression. The Empire State Building was built in 1931 in the Depression with very cheap labor, and it's been a good investment ever since.
Yeah, it makes sense. And, of course, gold and silver, if there's deflation, their purchasing power goes up, and if there's inflation, their nominal price goes up as well.
Right. And by the way, if deflation is bad enough, the government, believe it or not, will devalue the dollar against gold. In other words, it'll be the government that makes the price of gold go up, and that's astounding to people because they say, well, aren't the governments conspiring through leasing and other mechanisms to suppress the price of gold? The answer is yes, there is some of that going on, but that's because the governments expected more inflation than we actually got. If deflation takes over and they get desperate enough and all the other policy doesn't work, they'll actually devalue the dollar against gold, in other words, raise the dollar price of gold to force everything else up. This is exactly what Franklin Roosevelt did in 1933.
Yeah.
1933, in the depths of the Great Depression, during the longest period of deflation in American history, the price of gold went up 75%. So that kind of shows you the funny world we're living in.
Yeah. Now, what about if this chaos takes place, does it threaten our food supply and our means of survival? That's a lot of questions that we get on the show here. Should I stock up on food?
Well, I'm not really. There could be social unrest. I think I think prudence is required. I wake up in the morning. I go to work every day. I travel around the world. I'm not living in a cave eating canned goods, But I think prudence would say that, to have some, measure of, fresh water and food and, basic, things like flashlights and batteries. And, everyone should probably have that anyway. Here, I live on the East Coast. We need them because we get whacked by hurricanes every now and then. We've had, during Hurricane Sandy, we had
Sure.
eight days without power. So that wasn't caused by monetary conditions or social unrest. It was a natural disaster. But yeah, I think that's good advice for everybody.
Yeah, and when the dollar dies, if it dies, because if it goes to deflation, then the dollar becomes worth more than ever. But let's just say that it does die, a new system has to be put in place because modern man cannot live without money, because we must have a medium of exchange, because you can't go trade a book for a steak at the supermarket. It can't be done. We must have money as a practical means of survival because the system is so complex that this medium of exchange makes our modern life possible. So a new system has to be crafted, and you and I have lost faith in our leadership, but at some point a new dollar or a new currency unit will have to be hatched. And when does that take place? When the absolute collapse occurs, or 2 weeks before they meet at the Plaza Athénée and all the leaders of the world sit down? I mean, at some point they have to come up with a new scheme, don't they?
Well, they already have. It's just a question of when they roll it out. By the way, the other day on Sunday, April 13th, there was a secret meeting at the IMF. And by the way, this is not deep, dark conspiracy stuff. Just go to the IMF website. You'll see the press release. Or if people follow my Twitter feed at James G. Rickards, Rickards is Rickards. If you follow my Twitter feed at James G. Rickards, I've tweeted this out. They had sort of a dry run for New Bretton Woods. It was, and they said who was there. Some of the people who were there, but some of them were not disclosed. So it was Christine Lagarde, of course, head of the IMF. David Lipton, who's the U.S. guy at the IMF, so he watches out for U.S. interests. The head of the Bank for International Settlements, the head of the Swiss National Bank, and then it said a number of other prominent economists. It didn't give the names, but you can probably guess it would include people like Muhammad Al-Arian and Barry Eichengreen at Berkeley and others. And they were talking about the monetary system beyond what they call the new normal. They were talking about a new global monetary system. Now, there's no transcript. We don't know what was said. We don't know who everyone was in the room. But this kind of stuff is already happening. And when you tell people, they're shocked. I'm like, no, you can go look at the IMF website. They have world money has existed since 1969. It's called the Special Drawing Right, or the SDR. And it's one of these geeky names. Because if you called it world money, that would sound a little spooky, right? Mm-hmm. So they give it these technical names so people don't know what they're talking about. But that's what it is. The Federal Reserve can print dollars. Well, the IMF, the International Monetary Fund, can print SDRs, which is world money. And it's not new. They've been doing it since 1969. Now, they've been doing it in small amounts. But the next crisis that comes is actually going to be bigger than the Fed. The Fed has taken its balance sheet to $4 trillion. They're leveraged 80 to 1. They're insolvent on a mark-to-market basis. The Fed's broke. So they're tapped out. So when we have a liquidity crisis of the kind we had in 2008, the next time that happens, the only way to reliquify the system, the only clean balance sheet left, is the IMF, and they're going to issue these SDRs. By the way, they published a paper in 2010, also available on the website. I talk about it in my book, first book, Currency Wars, where they kind of gave a step-by-step program of how the SDRs would take over as world money. So this is not speculation. This is not crystal ball gazing. It's already happening. It's just a question of how quickly they accelerate that in the face of the dollar's collapse.
And all they need is the crisis to happen, and then they just
Correct.
roll it out, and stability
Correct.
comes, and your dollars become worth way less than they are today, basically, right?
That's exactly right. The dollar won't go away, but it'll be like the Mexican peso. In other words, it'll be local walking around money in the United States. So if you and I meet for a drink, we'll pay for it in dollars. But it'll be like if we were in Mexico, we'd use Mexican pesos. But it won't be used for the price of oil, balance of payments, the value of gold. The big things in the world will be in SDRs.
Now, China, everybody thinks that China is doing everything right, Jim, right? They were like the Japan of the 80s, where we thought Japan was doing everything right. But they've got some huge problems. Are they the future of the world, or are they just going to disintegrate like they've done so many times in the past?
Well, look, they're a big player in the world. They're 10% of global GDP. They're not going away. So, yeah, they'll be an important part of the future, but they are going to have a financial collapse and a banking panic. And I have an entire chapter in my new book, The Death of Money, chapter 4, just on China. I've got a whole chapter on the euro, which is chapter 5. I've got a whole chapter on China, which is chapter 4. I hope the readers enjoy it, but it really takes you through step by step as to how a lot of their growth is bogus, not because they're lying, but because they're getting the growth through investment, but the investment's being wasted. So let's say I put a $5 billion train station in my small town here in Connecticut. Well, technically, that's $5 billion of GDP. It looks good, but it's still me and the same 20 guys going to work in the morning. We're not going to pay more for our train ticket. So if you drive GDP with investment using borrowed money that you can't pay back, eventually that debt's going to collapse and there'll be a financial banking panic in China. So I do expect that, yes.
Yeah, and if you had an empty city in New Haven that nobody ever went to, but it looked really good, the skyline, but it doesn't really contribute anything to value or wealth building, right? Because it's all in hot.
I've been in China. I've seen these ghost cities. I've been now. I got mud on my feet going out to construction sites, actually looking at them. I went to one place out in Beijing, and I talk about this in my book. They weren't building a city. They were building 7 cities in a row, back to back, over about a 20-mile stretch. So this would be like, I'm here in Connecticut. It would be like building, Stanford, White Plains, New Rochelle, and Bridgeport, or more. But the point being, every one of these cities had 6 or 7 skyscrapers, kind of 20 to 30 stories, luxury shopping, apartment buildings, 5-star hotel, man-made lakes, metro exits, highway exits, et cetera, golf courses, et cetera. It was all empty, all of it.
Yeah.
It's mind-boggling. And then they say, oh, well, we're building for the future, but that ignores obsolescence. I used to travel quite a bit in Africa, in Central Africa in the early 80s. They had a commodities boom in the 70s, because coffee and cocoa and oil and things went up. They made a lot of money, and they said, you're in Kinshasa, Congo, it was like a year at the time. And they said, oh, we're just like New York, let's build a skyscraper. Well, by the time I got there in the early 80s, the windows were falling out, they had rust stains running down the side, the elevators didn't work. As putting up a building, it doesn't take care of itself. You've got to maintain it. You've got to occupy it. You've got to continually put money in it. So even the theory that, okay, we know it's empty, but people will come in the future, that's not true because of obsolescence. So the whole thing's a waste. It's got to be written off, and China's looking at its own financial panic and collapse coming sooner than later.
Yeah, and, we see that over and over. If you don't reinvest and maintain your property, it turns to garbage so quick, as you see with all these foreclosed homes that are just crumbling all over the United States. And it's just interesting to see what you can do with debt when you print up money, and the upcycle, it feels so good, but then the down part of the cycle, it's a disaster, and no doubt that's what they're going to experience soon. One final question, Jim. For the people, the mainstream economists who say that gold's going down to 1,000 this year, you have any opinions on that?
Yes. By the way, I have a lot of insight on that because that $1,000 call was from a Goldman Sachs research report, and I talked to people inside Goldman Sachs. They don't believe it themselves. In other words, if you talk to, traders and investors at Goldman Sachs, they would say, "Oh, that's the research department. We don't listen to them." I mean, I've actually had that conversation. And you go over to the research department at Goldman and you say, "Well, what's the model for your $1,000 call?" They go, "Oh, well, our projection for growth is this, and normalized interest rates are going to be that, and real interest rates are going to be this, and gold correlates adversely to real interest rates, and so gold's going to go down, blah blah blah." That's a Fed model. It has nothing to do with gold. And so I mentioned this to the people I was talking to, and they said, well, yeah, all the research guys are ex-Fed economists. So what do you expect? So in other words, even inside Goldman Sachs, they were laughing at their own research department. So I don't put much stock in that. But unfortunately, a lot of investors do, and they hear that, and they sell gold because they think it's going down because Goldman said so. But in fact, that model is very detached from reality. I'm very bullish on gold, as you know. Look, it's volatile. It could go down tomorrow. I'm not guaranteeing results, but I do have it in the funds that I manage, and I have it, in personal portfolio, and so I do recommend it to investors. Kerry, it's really, been been a great conversation, and look forward to coming back on your show.
Hey, we really appreciate you having you on here, Jim. Just tell us how we follow you, website, and where to buy the book.
Sure, I have a website. It's the JamesRickardsProject.com. So do JamesRickardsProject.com. You'll find that. And you can buy the book in bookstores, also Amazon and Barnes & Noble. And if you actually go to the website, you'll find a couple links to buy the book as well. And for listeners who are interested, I recommend following me on Twitter. Again, my Twitter feed @JamesGRickards. I put out a steady stream of commentary on the international financial system, so I hope people follow and enjoy it.
All right, and just don't forget the link to Jim's site. You'll find it in the show notes to this interview on financialsurvivalnetwork.com. Don't forget to subscribe to the newsletter. Jim, thanks so much. It's always a pleasure.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.